Welcome to Trading Nation. I'm Mike Santoli. The U.S. economy expanding at a healthy clip this year, while the stock market races to new records. But is there danger lurking in the housing market? Lakshman Achuthan is co-founder of the Economic Cycle Research Institute, and he joins us now to give us his take on the economy. Lakshman, great to have you with us.
Thank you, Mike.
Obviously, by many measures, the U.S. economy seems to be running pretty hot. We got the ISM figures today, look very good. Job market obviously seems quite tight. What is it about the housing market that you think complicates the picture a bit?
Well, again, from our perspective, we're looking at everything from through a cyclical lens. Is it in an upswing or a downswing? And looking at leading indicators of the housing market and home price growth in particular. That is cyclical. And our leading indicator, our leading home price index, has made a downturn that it hasn't made in a long time. The last time it was this week, we're showing a chart of it here, was in 2009, coming out of the last recession. And this leading index in 2006 really did call the housing bust. I wouldn't say there's a housing bust here now, but directionally we have a home price growth downturn. That is going to happen. So that's a clear red flashing light on our dashboard of cycle indicators. For the overall economy, we have a yellow light. We think there's a slowdown that's happening here. But on the housing and home price growth, absolutely, it's a red flashing light. This cycle is turning down.
So do you think that, I guess, what's the kind of transmission mechanism from a downturn in housing prices to the overall economy perhaps stalling at some point?
Well, I think the link really goes through the wealth effect. And so you see confidence has been very, very high. The asset prices, stock prices have been up. Home prices have been up until very recently. They're starting to top out. And so when you have rising asset prices, you have a positive wealth effect. And here, one piece, the home price asset, you're seeing that growth turning down. So I would look to this starting, instead of being a wind at the back of the consumer and consumer confidence, it's now more of a headwind going forward. It remains to be seen just quite how sharply this can fall, but the direction we have is clear.
So obviously there are some positive offsets that might be carrying the economy here. Obviously we got the tax cut, we got some extra fiscal spending during this year. Corporate profits are very high. As I mentioned, consumer confidence and the job market remain strong. So I guess the question is, how long before gravity starts to exert pressure on those things? Do you think 2019 is a more dicey year for the economy?
Certainly in terms of the direction of growth, yes. The home sector, the housing sector, is one of many key drivers of overall economic growth. And so I think directionally we should expect growth to be slowing. Now, it's not a recession call, it's just a yellow light, a slowdown. We've had a few of those since the last recession, and maybe this one will resolve itself without going negative. But the direction, I think, is probably more to the downside. And so to the extent there's going to be surprises on overall growth, I would expect it to be to the downside going forward, not to the upside.
And just to look for, what can sort of complicate that call a little bit, is there precedent for home prices to kind of roll over in the middle of a cycle and then recover again, or is it pretty much kind of game over once the prices start to decline?
Oh no, you could have them decelerate and accelerate again. That's perfectly possible, and we'll continue to monitor the leading indicators for any sign of a soft landing in the home price cycle. But right now, there's nothing like that. It's just more slowing ahead. And in the context of the overall economy slowing, that has to be taken into account. We do have a lot of positives, right? You do have deficit spending. You have a lot of growth in debt. When you look globally in the past year, the U.S., Europe, China, the debt growth has been about 10 times the size of GDP growth over that same period. So there's a lot of stuff that's pushing out to keep growth aloft. And it's pretty remarkable that it's still going to slow a bit in terms of the indicators we're seeing. All right, well, we'll watch for those yellow lights. Lakshman, thank you very much for joining us today.
And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.